overall, we've seen several factors shifting in a more favorable direction. So when we look at our revisions for growth, what we can see here is that our expectations for growth in 2022 have steadily risen over the past 6 months, going from 3.1 to 4.2%. And consumer spending is going to be really a key driver for this, which has also seen an upward revision. And that's going to be due in part to higher outperforming. We've seen consumer spending outperforming expectations in 2021, thanks in part to a more substantial bolstering effect from social spending and the more rapid rebound of some other key factors that are favorable for the consumer spending outlook. When we look at exports, we can also see that we have a notable upward revision there, and that's going to be due primarily to, as Baniana mentioned, our expectations for higher oil prices in 2022, which would account for around 40% of our exports in Colombia. So that's going to be a really substantial factor there. The oil revenue is also going to be a key driver behind our expectations for higher levels of government spending in 2022. So that's going to bolster the ability to free up some resources. And we're also seeing on the government spending front the elimination of some restrictions on pre-electoral spending, also providing a more favorable outlook for budget execution in 2022, particularly benefiting infrastructure projects. So across the board, factors shifting in favor for higher growth, with an exception on the investment front, which we have seen reasons for a slightly slower rebound on that front, and due to political risks and also rising costs for businesses on the tax burden front. So that's something I'll get into in more detail. But first, going into looking at consumer spending, we can see that we have a favorable shift that has really benefited and been notable in respect to 2021, with really exceptional retail sale performance. And that's again due in part to a stronger bolstering effect from social transfers, including the Ingreso Solidario program, which has really been a key driver for consumer spending. Going into the some of the factors that we've seen apart from that, we see stronger levels of a labor market rebound, as well as a stronger level of household savings. These factors recovering at a more rapid pace. So these are overall going to help offset some of the challenges that we see dampening a consumer spending outlook, in particular the inflation outlook, which we are going to, which we've seen inflation accelerate certainly over the past several months, and we expect to remain elevated in 2022, though still remain below some of the region's larger primary markets. So overall, what this translates to is a shift and a moderation in consumer spending demand, in consumer demand relative to 2021, but still an elevated outlook with respect to pre-pandemic levels, slightly elevated. So overall, favorable. And as far as where this consumer spending shifts are going to translate into destinations, what we're seeing is, first of all, just a broad based bolstering of demand, but also we're expecting that non-durable goods, services, and tourism, for example, will be among the best position segments in 2022. So that's on the consumer demand front. If we go to the slide on oil prices, we can see that as I mentioned, we also expect exports in 2022 to have some more substantial growth, and that's in large part due to our expectations for oil prices, which we've seen the oil sector undermined by logistical challenges in 2021, as well as heightened political risks. However, in 2022, while we see that continuing to a degree, those challenges, we also are seeing these higher expectations for oil prices averaging around $85 per barrel for next year, or for this year. So that's going to be a crucial factor as far as the recovery of the sector amid these highlighted electoral risks and uncertainty. And it's also worth noting that with respect to oil prices, what we're seeing and expecting for 2022, which is an average of $85 per barrel, is also exceeding the government's forecasts, which are used with respect to its fiscal planning for the government's resources. So if we go to the next slide, we can see that already this has had a bolstering effect. The higher oil prices, as well as a strong rebound in 2021, bolstering tax revenue, has bolstered the government's degraded finances, with our fiscal deficit expectations falling for 2021 from 8.6 to 7.6%, and also a better outlook for 2022. And again, this is considering still expectations for prices that are conservative and below what we are expecting. So overall, this is going to continue to bolster government spending, in particular, with respect to freeing up finances, as well as other factors on the government spending front, benefiting a more pre-electoral spending, which previously has been limited by government restrictions, but we've seen some reforms creating a more favorable shift on that front as well.
That is really interesting, Andres. And if I capture everything, Colombia is benefiting from high oil prices, and then also the lingering of social spending that, like all the governments in LATAM, they have to open the checkbook. But there are one thing that we need to pay attention in Colombia this year is heading to a crucial elections at the congressional and, of course, at the presidential levels. Did you see any underlying risks that companies and Colombia watchers are not completely paying attention to? What is your take on that?
Yeah, I think we are definitely seeing underlying risks in Colombia, and we are seeing them playing out, particularly with the investment story, which we can see here. While we have a less optimistic view, particularly with respect to the other drivers. So while we have the broader economy recovering already in 2021, the recovery of private investment is seeing a much slower rebound, which we're expecting to recover pre-pandemic levels in 2023. So that's going to be due to several factors, including the rise of tax burdens, and also, and I think more key behind this is going to be the political uncertainty that we're seeing with the elections, with Gustavo Petro in particular, who was a leading candidate, promising to adopt some populist policies that are going to that would certainly undermine the business environment. So we're seeing those effects. But if we look at our scenarios, we can see that overall the electoral situation is certainly going to be key as far as setting the direction for both growth and stability of the peso. So it's important to note that we do expect a more moderate candidate to win in our base case scenario. In our downside scenario, we do see a situation where a Petro victory could happen and result in lower growth, further depreciation of the peso. At the same time, we would expect limitations with respect to a more oppositional Congress, and also legal challenges to restrict the Petro presidency's ability to adopt more dramatic changes to Colombia's economic model.
Hi, my name is Krista Reganey, and I'm the Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.